you did start to think that things were in place for maybe some type of a pullback. And the market hasn't really gotten way out ahead of you, but it has continued to move higher. And I don't know what do you need? I mean, you got inflation, you've got growth concerns, you've got a new variant, you've got everything, and it still seems to resist coming back down to where you thought maybe it needed a pullback. What's it going to take? And are things starting to set themselves up for the eventual where you're absolutely right about what you were saying? I know it's a long question, but you see what I'm getting at.
Yeah, no, look, I think it's completely justified, too. Look, I mean, our fundamental view, I think, has been correct. I mean, you mentioned inflation's out of bounds. You have central banks tightening, maybe a little faster than people expected. Earnings revisions have rolled over. Numbers are still going up, but the revision factors are coming down. So all the things are in place. And we did have a correction in September. We acknowledged in early October that was probably going to be it. We'd have a seasonal bounce back, but it didn't change our fundamental view that, the coast was clear. And look, nobody can predict the stock market, week to week, month to month. But our fundamental process suggests that, look, the risk reward is just not nearly as good today as it was a year ago. I mean, that's pretty obvious. And I think there are some people who might be suggesting that it is. And I just think that's incorrect. Now, we talked about S&P 500. Obviously, that's done really well. That's actually part of our call this year has been there would be a huge rotation towards large cap quality. And the S&P 500 happens to be the highest quality index in the world, along with the NASDAQ. And that's one of the reasons they've outperformed. You look at the Russell 2000, an index we've been unfavorable on since March, has really gone nowhere. And I think that's really the story, Joe, is that there are many companies executing really well, and they tend to be larger cap, high quality stocks, and those have done well. And then there's a whole host of companies, the average stock has not done that well because it's a difficult operating environment. And I think that's the main point of our outlook, is that operating environment for the average company is going to remain difficult for the next 12 months. And now you have financial conditions probably tightening. So it's not the end of the world. We're just saying, look, the risk reward is not great here. We want to pick stocks. We want to try to find things that we can own in that type of an environment where we've had some pretty good success.
Shepard Smith here. Thanks for watching CNBC on YouTube.